Good day, everyone. Leading RE has been organizing webinars in the past weeks on resilience, adaptation, challenges, opportunities, even responses and best practices. At present, most markets are opening up. It is high time to bring back the commercial discussion to the fore. Around 200 companies of the 550 plus members of Leading RE are active in the commercial arena. This session aims to keep members abreast with the current challenges as well as opportunities in dealing commercial properties, especially with the impact of the pandemic. When we talk of commercial properties, these are mainly for business or profit, as compared to residential properties that are mainly for residents. Commercial properties are varied and may be clustered into sectors like office, retail, industrial, logistics, and hotel, among others. Of these five main sectors, which of them offers cycle-proof opportunities to existing residential business? That's one question that we hope to answer today. More importantly, the Leading RE network can leverage its global reach as well as the existing commercial capabilities of its members to expand our value proposition to our clients. Okay, let's dive into it then. I am your moderator for today. I am Jojo Salas, Director for Global Research and Business Development for APAC. I am the staff liaison for Leading RE's commercial initiative as well. I have 22 years of real estate experience, and I work for some of the largest corporate real estate companies, running commercial agency, investment properties, valuation, consulting, and advisory. I handle global accounts like AIG, HP, Cisco, Intel, and Shell, to name a few, and transacted with international and investment banks. Before we proceed, here are some rules. All participants are muted, but please feel free to use the chat box for your queries. This will be an interactive panel, and we will try to answer your questions along the way. We shall flash on screen the email addresses of the panel so that you can email them directly if you have follow-up questions, or better yet, if you have potential deals in the making. Okay, let me quickly introduce our panel of commercial experts, and we will give them time to elaborate on their experiences as well as on their companies. From the east, where the sun rises, let me start with Mike Mabutol from the Philippines. Mike is the president and CEO of Pinnacle Real Estate Consulting Services, Inc. He has been in the real estate industry for 20 years. His experience in the industry is broad, ranging from representing property owners, investors, buyers, tenants, on selling or leasing properties, managing diversified portfolios, to finding opportunities for capital markets. His primary focus in the last 8 years is assisting banks and investment funds in disposing their non-performing assets. He is also considered as one of the top property auctioneers in the Philippines. Mike has sold and resolved more than 2,000 properties, amounting to more than 50 million US. Next, we have Paul Chumsai. Paul built his real estate career in the United States and set up VR Global in Thailand a few years back. He is well known in the real estate networking universe from his multiple roles with NAR as its global ambassador to multiple countries. Paul is passionate about technology and furthering the cause of international real estate education in Thailand. Then we also have John Thomas. John is the group director of Realistic Realtors based in India. He has around 20 years of experience in the real estate in several streams of business. John has initiated new businesses and Realistic Realtors expansion across India. He is well-known real estate professional due to his experience in investments, office leasing, logistics and warehouse, valuation service, and other corporate advisories. Then we also have Jeff Bennett. As founder and president of Bennett Commercial LLC, Jeff has 35 years of experience in community and real estate development. A merger with Macaulay Real Estate has provided the support that creates results through Northwest Indiana and Chicago Southland. More recently, a merger acquisition was completed with Commercial Advantage. Thus, Macaulay Bennett Commercial Advantage is a full-service, geographically based real estate company and a proud member of Leading RE. Jeff's extensive real estate background affords him experience in land acquisition and assemblage, industrial, commercial, and residential land planning, affordable housing development, tax incentive procurement, and property management, among others. Another panelist for today is Judith von Hasselbach, as reflected in the webinar invite. For the record, this is not an all-male panel. Judith is the managing director of AGBF Germany. Unfortunately, or rather fortunately, she cannot join us today because she needs to notarize a commercial deal right now, same time of our webinar. I will share more on this later. All right, this is the summary of our Power Pack panel. Let me start off by asking, what is the status of back to work in your countries? And what are the impacts of the pandemic in office operations? And please continue introducing yourself and your companies as well, especially your exposure to commercial transactions. Mike, you have the first crack.
Yeah, well, thanks, Jojo. Let me just start by, of course, introducing Pinnacle. Pinnacle has been in the Philippines since 2005. We used to be part of Capital Services Group. Uh, Capital Services Group is the asset management company of Lehman in Asia. So when they entered the country in 2005, when Lehman entered the country in 2005, they outsourced everything to Capital. So of course, we know what happened to Lehman. They went bankrupt in 2008. So Capital has to divest from the Philippines in 2011, and that's when the management buyout happened. And from then on, we expanded from doing asset management to doing anything and everything, almost anything and everything when it comes to real estate. We have office sales and leasing, we do property management, facilities management, appraisal, among other things. So we could consider Pinnacle as a one-stop shop when it comes to real estate. And we have 3 offices here in the Philippines, basically covering the 3 regions of the country. Then going back to your question, what status or level of back to work here in the Philippines? We just got back this Monday after 2 months of lockdown. Everyone is on skeletal force setup right now. Most are still working from home. There was a directive from the government to limit the workforce to 50%. That's a
50%.
maximum. That's a maximum. That's a maximum right now. But when it comes to Pinnacle, everything's still voluntary. We are just on our 3rd day of going back to the office, and I'm going to put a number, maybe about only 10% are going back to the office or have gone back to the office since Monday. Basically, our game plan during the lockdown and on these recovery stages, basically 4 things. One, of course, staying in touch with clients. 2, being visible online. I guess that should be our direction from during the lockdown and moving towards the recovery stage. And then 3, during the lockdown and during the first phase of this recovery stage, we should maximize this in terms of allowing our clients do the due diligence, providing documents, addressing all pending concerns, and then when everything normalizes, that's the time that of course we could just reap what we saw, so to speak. And then of course there's a move as well for a company to move towards virtual viewings, being present online, and doing all the marketing, and again being visible to our clients. So yeah, that's where we are right now.
Good to hear that at least you're back in the office, and of course the virtual tours and all as adaptation. How about in Thailand, Paul? How's your back to office mode?
Actually, before I begin, I just wanted to thank you for the opportunity to be present on this panel. Very distinguished panel. I'm very great leading RE. And as you had mentioned, Jojo, I actually started real estate in the United States, actually Chicago, to be quite honest and precise. Started in Chicago, real space, and then started working towards the foreclosure short sale market, where we're probably going to be seeing that type of property come up within the United States, within the Chicagoland area, pretty soon now, because as the pandemic occurred, obviously we know that a lot of people haven't been working, some have been laid off, and we kind of worry about those in the States, as well as we worried about it here. As mentioned, I'm actually the current global ambassador to Thailand, Singapore, and Malaysia for NAR, which is part of their global initiatives, as well as volunteer for the Chicago Association of Realtors to as much capacity. Started VR Global in Thailand just a few years ago. We registered as a company in Thailand. We have no licensing law, so obviously it's a very good fit for me as a U.S. citizen to come here and just open my own shop and bring along the expertise that we have, in the retail, in the commercial sector, and bring it here. We actually started off at really concentrating on residential initially, but as we started working, we realized that a lot of our success became from all the connections that we had. So a lot of the connections we had, from owners and the land banks, from the government, and from various projects. So that's how we really started in commercial. And right now, our specialty really is in the retail consulting, in shopping mall consulting. That's where we really gain our momentum here in the Thailand area. So we've really been focused on that area. And obviously with the consulting, we started helping out with office leasing and stuff like that, and retail leasing. But most of our projects is still doing the consulting side. As the pandemic occurred, obviously we had to shut down as Thailand had come to a lockdown, and we've been in a lockdown for 2 months, and it just started opening up as of this past Sunday. So we've actually been open up probably for the next past few days. So in terms of the easing of the restrictions, the government actually allowed 10 business sectors to open up: shopping malls, restaurants, hotels, and various other. The only thing that we're still closed in Bangkok is the bars are still closed. So we're not quite there yet. So that's probably going to be the last thing that opens. We're still under strict curfew, so a lot of the businesses still happens. We have to be home and off the street by 10, and it's really fully strict enforced. We're on a district by district, or in the US, it's probably city by city lockdown, and sometimes neighborhood by neighborhood lockdown. So we actually get checkpoints. You have to go through checkpoints if we were going to go to the province or other cities. So, but as the crisis, or as the release of the lockdown had occurred, we actually see some momentum in terms of a little bit of retail. People are actually starting to go to work, but still at a very limited capacity, because even before the lockdown and even after the lockdown, we still, in terms of the Thai citizen, are still afraid of the virus. So we don't enforce, as a company, we don't enforce you that have to go to work, but we also, because we're always having a group call every day, so we always work from home. If you need to see clients, well, just be careful and go see clients. You don't need to come to the office. There's nothing to the office. Everything we have is pretty much online. Just a few things are still at the office. In fact, our office has been closed. Our office has been closed, so we couldn't have access to our office building anyway. But as we see, buildings are opening up. There's still some strict guidelines as to entering buildings. So we kind of see that. We have to have our temperature checked before we enter the buildings. Everybody has to be masked. So we're 100% masked. So if you're not masked, you're not getting in. If you have a fever, you're getting sent home. As you're coming in through the building, everybody's scanned. And even in some offices, you're going into your office and you're being scanned as well. And even in the shopping district sector, as I was actually, we opened up on Sunday, and today was actually the first day that I have actually seen the public go in, and everybody gets checked. The government has an app now, so you actually have to register on an app before you actually get in. So this is really the new norm for people. We're still not running at 100% capacity, so I think we're restricted by the amount of people that can enter buildings and enter shoppings. And even as we're into the shopping malls, each of those little retail space or stores actually check their people's temperature before going into that store. And so we're very again, we're very self-conscious, but very strict. So this is really the new norm for everything from retail to office and so on. So we're looking for the opportunity. We're looking for our country to grow a little bit. I think from the local side, I think we're okay. We're single digits. Our infection rate is single digits, so we don't really have anything to worry about. Our airports are still closed, so again, it's probably mostly local fear that we're seeing. So we're hoping that within the next couple of weeks, it picks up a little pace a little bit. But I think for at least the next 30 days, we're still going to be at a very slow pace moving forward.
Thanks, Paul, for the very detailed report, and good to hear that some sectors are opening, and hopefully the airport and the bars will be open. How about in India, John? How's the operations there? I'm sure in terms of innovations, you have a lot. So how's the office? Is it also a mix of a blended virtual and the actual physical office?
Hi, Jojo. First of all, thank you for the lovely introduction, and thank you for calling me in. Thank you, leading Ari, to make me part of this, and I'm a panelist. It is great to be here with you all, guys. So I would just like to add on with the company profile as such, though Jojo has briefed it well. So in India, we are one of the largest commercial real estate consultancy firm when it comes to the employee strength and the service coverage, about 400 cities across India and having 18 offices across different regions. That makes us one of the largest in terms of the servicing part. And we have allied group companies which are into construction activity as well. We have already constructed 1 million square feet and 1 million square feet in making in times to come. So that's quick about what Realistic Realtors is all about. And we, as you said, we are into all verticals, starting from office, retail, warehouse, investment, and interiors as well. Coming back to the office, the back to work, which you asked. Yeah, so it's almost 2 months since we are in lockdown. And we have recently, last week, started with lockdown 4.0 from 18th of May, where offices across the country are allowed to function with 33% density. And with of course, a couple of strict guidelines and hygiene, social distancing to be followed, as very well said by Mike and Paul as well. Of course, by the start of next week, we assume that the work would predominantly resume to a large extent, and we all would be back to office. Though we've already started our office, and the deals are on. And to be very precise, so as Realistic Realtors, let me inform you from a positive note that during the lockdown itself, we have closed a couple of transactions when it comes to investments, and when it comes to leasing as well, when it comes to office, and some retail leasing as well. And of course, in logistic and warehouse industry, we all know that that's the least impacted one. We have done close to 100 proposals to the client. So that's something which has been motivating entire RRians across the organization, and I'm sure which will lead to a very positive note. And we understand, and of course, this entire situation right now is as such that we have to live with it. We all know that the COVID is going to be here with some time, and we know that we all have to live with that. So we have understood that pretty precisely, and we are going ahead with all our deals, with all our passion and energy. And of course, within this lockdown period, we have been quite busy in terms of brainstorming with our teammates, doing activities in terms of calling our clients, staying in touch with them, and doing business activity as well. And then a lot of team synergizing activity, team bonding activities have been done, and brainstorming in terms of new strategies also been done. So all in all, yes, though nothing moved much in lockdown, but overall it was quite a productive time which we utilized for comeback in a better way. And yeah, in terms of if you say office operation, yeah, it has been affected, and relocation expansion has been largely postponed. But lately, people are trying to come out with that wait and watch situation, and they are willing to talk, willing to plan for their next move. That's from my side.
Thank you, John. It's good to hear that you're closing deals even during this lockdown. And apparently, this is one sort of differentiation compared to residential, because for office, pretty much companies, corporates, they plan ahead. It's not just like, okay, let's stop moving or something. While it may be, some companies may be thinking, oh, do we need that same space? But pretty much the gestation period of commercial properties, especially office, would be longer, and it would be tough to sort of put them on hold for a long period of time. But anyway, before that, let's go to the US. Jeff, how's the back to work in the US, and especially in your company, in your state and cities?
Thank you. And I'm pleased to be a panelist, pleased to be a member and a big fan of Leading RE, and the commercial initiative is really a powerful initiative. I had the pleasure in attending the Global Symposium, meeting the gentleman on the panel, and I think we've grown together as we, for me, probably the old guy on the panel, to think that I could be on so many Zoom meetings and WebExes, and we've still figured out a way to do business. Jojo, it was just March 11th or 12th that I was at the Leading RE conference in Las Vegas at the Wynn Hotel. And as I reflect back on that, the manager of Wynn actually came on stage and thanked us for being there. We were probably the last of conferences at that time. I recall betting on 2 NCAA tournament games, thinking this would be a good opportunity to place a bet. As I landed on a plane that was half full, coming back from Las Vegas to Chicago, got in my car, listened to the radio, and on the way home, heard that the NBA season had been canceled. So you think about that, that wasn't long ago. There's been, mass layoffs in the U.S., and, there's certainly a tremendous effect that we'll try to figure out going forward. It's very diverse, of course, in the United States. In Chicagoland, we were pleased when the governor spoke that real estate was found to be essential. So we've been able to continue to operate. As was stated, the commercial business, we've been able to move to closings. So the systems have availed themselves. Business has continued throughout. We're just beginning now to open up. So retailers have been closed. Barbershops, salons have been closed. The major hardware stores, etc., have been open. It's been difficult for that restaurateur to understand how Home Depot is open and they can't operate. So we'll see how that happens. That's just June 1st in Illinois. We'll start to see the opening of most businesses on a limited factor. The state of Illinois requires you wear a mask. There's commonly temperature checks. We experienced, we had a contractor in a commercial building that we were rehabbing for a lease, and the contractor was found to be tested positive for COVID-19. So that was as close as I got to this to COVID-19, chose to figure out what it would mean for me to go be tested, and in this area, I went and got a taco at a drive-through restaurant, and I can tell you that to be tested took about the same amount of time. So the hospitals have figured out a way. I think testing is going to be very important going forward, and I showed an ID, an insurance card, and it took about the same amount of time as it did to get a taco. So, you know, a lot to be learned going forward. I think we've certainly, it's not the first disruption that I've experienced in my career. And I would say that the Great Recession, 2008, 2009, likely had a deeper effect, you know, on the commercial real estate business, you know, even 9/11, the dot-com issue. So, you know, and I think it's sessions like this that are useful for all of us to understand that term we hear all the time, you know, what's that new normal going to be? Thank you.
Yeah, so thank you, Jeff, and it's a good thing that you mentioned our conference. I was supposed to fly to Vegas as well. I'm booked and all, but because of the lockdown, we were prevented from going. But our member in Hong Kong, I think in the past 2 weeks already held big events. Big is between 100 to 150, but it's good. And the hotel, they offer double the space to comply with the distancing requirement. So at least they're holding physical events, 100 plus people in one hotel. So that's really good. So for the opportunities and commercial properties, as I introduced a while ago, in terms of the sectors and hotel, they're saying it's really it would be beaten up basically because of the tourism is down, airports are closed. Among the five sectors, office, retail, industrial, logistics, and hotel, what are your take? Who are the winners and losers? I'm sure it would be a mixed bag, but what's your take on their returns? So we can do this. Probably you can go ahead, Jeff. So we can do the reverse. What are your in terms of winners and losers for the five sectors? What are your if you will bet, what will be your bet for the five sectors?
So I feel in Chicagoland, in the center of the United States, you know, the industrial warehouse development hasn't slowed at all. So we were experiencing e-commerce and million square foot facilities being built in the region. And we've been a part of some land sales with Amazon. So Amazon in 5 years has built 7 million square feet of warehouse distribution in 11 different facilities in the Chicagoland area and employ, you know, 7,000 people. So we have the continuation of that development. You know, there's money in the REITs in that sector. There's good transportation. There continues to be goods being purchased by consumers. The manner in which they buy the goods has certainly changed and continued to change. As we were talking before going live, you know, I read in Wall Street Journal, you know, Walmart's e-commerce business is up 74%. So, you know, I think that change continues to take place. At the same time, you know, retail, and there are others on the panel that are specialists, I think, in that category. While I'm not a specialist, as I watch and observe, you know, the major big boxes that we were used to shopping at, from Macy's to Sears to Penny's to Carson's, you know, they've closed. And there continues to be, you know, the closing of stores like that. So the retail sector has, I think, been hurt along with, you know, hospitality, you know, with COVID-19. I think we've been very involved as a company as we called to support our clients. I'm mindful of what forbearance means, and we've been involved in a number of negotiations and forbearance when somebody says nobody's coming to the front door to buy goods. Mr. Landlord, how are we going to find a common ground with that situation? So I think in closing, industrial warehouse has been strong, and I think we found big changes in hotel and retail. And I guess what I'm talking about is logistics when I say that.
Thank you. And even that one, forbearance or even tenant representation, so to speak. But we can discuss that more later. How about in India, John? What would be the winners and losers among the 5 main sectors?
Thanks, Jojo, for the question. I think in the gamut of sectors, none will be losers, whereas India is concerned in long term. Though some might not be winners actually, specifically when it comes to short term to mid term. Coming to hotel and retail, it is largely affected more than the others, if you ask me. Definitely, it will take some time for them to recover. Out of the hotel and retail might come back much faster than the hotel, especially where retail is still live through online transactions, through e-commerce, as rightly said by Jeff. Across here as well, the online mode is still on, and that's where the demand is still on the run. Office, yes, is much better off than hotel and retail because of many business like IT, BPO, health and pharma, still moving on and managing the demand as well. Though they are right now not in demand, they are applying a wait and watch scenario, but their plans are not pushed back in terms of cancellation, but they are on push mode, and they have postponed it for a month or two. So that's the positive part of office, that it's still on. And as I said, in India and within our organization, we have closed a couple of transactions which was in the process pre-COVID, and we have closed it during the COVID period. And coming back to logistics sector, as rightly said by Jeff, and we all know, India is also witnessing a very positive node on logistics sector. I would say a least affected one amongst all others, and in fact, it is gaining prominence in terms of its investment class because of a lot of reasons we'll deliberate later. But when it comes to warehousing space, the same is of course better in demand than many others due to e-commerce and other positive industries as well. Industrial sectors also have got largely affected as of now from short to mid-term because of the labor issues, because of the decline in the demand from overseas when it comes to manufacturing other stuff, but is expected to bounce back in mid-term to long-term, if you see, because industrial and manufacturing diversion from several countries is expected towards India, and that would definitely boost up industrial sector as well. So precisely, yes, if you say it in numbers, the top charts on a positive notes from logistic and then office and then industry and then retail and then last to hotel. So yeah, but overall I would say from a long-term perspective, everything would start rolling down from mid-term to long-term.
Thank you, John. There's just a question here, just a follow-up for you and Thailand, Paul next. But just a quick one on the hotel occupancy levels of hotels in probably not only in India but the rest as well. And since you mentioned, of course, it's just short term, but medium to long term, and we're talking about profitability. So, what are the returns of among the investors? What would be the returns you're looking at? So, first, what's the occupancy level on the average? I know it will be tough, but on the average in India, and what would be the sort of the returns that investors would be looking at in India? Whether it's office or hotel, it's a tough question. But remember, in UK, in the US, they're talking about negative rates right now. So I mean, if we can show positive, solid positive single-digit returns, that would be good, right? So again, the question is occupancy, hotel occupancy, and in general, what would be the returns that commercial buyers on investors would be looking or would be expecting in India, John?
So when it comes to hotel, I would not be the right person actually to comment on that. But yes, on an average, broad information based on what I have heard, it would be somewhere between 15 to 20% as of now, and it would definitely be depending upon location and state and all other factors as well. But yes,
sorry, that's 15% returns, right? Not the occupancy.
no, the occupancy. I'm talking about the hotel occupancy. Yeah, I'm talking about the hotel
15%,
occupancy.
1.5,
Yeah,
okay.
yeah,
Thank you for
yeah.
clarifying. I thought returns 15% returns. Okay. Sorry, go ahead,
Yeah,
continue.
if 15% would have been the return, I think across the globe people would be in India. So
They will be rushing to India.
absolutely.
Okay.
So yeah, so coming back to return on commercial properties. So as you very well said in the introduction, the commercial arena is varied and bifurcated into office, retail, logistic, and hotel and etc. So the return would vary depending upon the sector as well. But I'll try to cover up quickly and in a very broad way. I would start from office. As I said, office business has largely affected from a short term, but it is still on and things are moving on. And because of the supply, the relationship between supply and demand is as such in India in specific places, and because of the A-grade construction as well, especially for A-grade good quality construction, the prices has not changed pre-COVID and post-COVID, and the return could vary from as good as 5% to, and it can go to 8% as well, depending upon the property and the location. But when it comes to retail, again, it would go back to 4% to 7% approximately. But yes, of course, when I say 4 to 7%, there are exceptions depending upon several factors: the tenant mix, the location, the size, and etc. Logistic is very, very exciting because as I also know in terms of its prominence worldwide as being one of the best asset class. Here in India, it is after commercial office and retail. But during these times, suddenly the prominence and the attention towards logistic and warehouse industry have increased. And the return earlier, which was about 8 to 10%, has gone down for a pre-leased property somewhere between 6 to 8%, as comparable as the office market.
This would include e-commerce, John, right? The logistics would include e-commerce, right?
Yes, all warehouses. I'm talking about the warehouses,
yes.
including 3PL, including FMCG and e-commerce industry as well. So, but this return I'm talking about already ready and rented warehouse. But when you talk about built-to-suit warehouse, where it is a greenfield, that return could vary from 9 to 11% as well, depending upon again the location and tenant. So, but it's overall from an investment point of view, commercial, office space, retail, and logistic, all the three are very good investment class in terms when it comes to India, and they gain prominency because of the stable return, the probability of getting it leased quickly, and of course, the scalable, the increase in the value. That also is one of the reason why these properties are always on a positive note.
Thank you, John. On to you, Paul. Hotel occupancy, then some sort of returns, expected returns. If you're looking for commercial properties in Thailand, what would be the safe returns?
Well, I think overall, I mean, in the short term, obviously Thailand has taken a big hit in the hospitality industry. I mean, realistically, I mean, the airports have shut down. There's no international flights coming in. Hotels are forced to shut down. I think we're running at about an 5 to 10% occupancy rates in terms of the hotel. But that, I think that's just kind of a short-term glitch into the economics, just simply because we just can't open up the airports. But I think once the airport starts to open, I think that sector will begin to rise and rise again, because Thailand still ultimately is one of the safe and
Destination,
demand
yes.
toward destination in Asia. So we're looking forward to that. We're looking to the opening up of the airports. I think it's per the government. I think they stated about the end of June would be the earliest that the airports can open. So we're definitely waiting for that. So we're at a little blips on that one, but at the same time, we know that the hotel occupancy is down, and that's also becoming maybe one of the best place to invest in terms of a long-term goal, a long-term strategy, because as the hotels come down, and we have plenty of hotels, and we investors from all over the world are pretty much like hawks nowadays. They're just flying above Thailand, just wandering, waiting to see which hotel is up for sale, which one is about to like scale down, and which one is ready to go. So at this point, we're seeing hawks fly above the ground, and I think for those investors, I tell them, hey, you know what, you're probably going to be waiting about 6 months before the rates actually start to go down. There's been a moratorium in terms of what banks can do for non-payments of mortgages or rent and stuff like that. So government had issued 6 months moratorium. I think we're in our 2nd month, so we got 4 more to go. So now we just have to wait and see which hotel is going to be short on cash flow, and those are really the ones that are going to be ripe for picking. And we're talking about hotels in Bangkok, Pattaya, Phuket. I mean, they're all hurting. I mean, like I said, they're all closed. In fact, Phuket is shut down. It's been a lockdown, and they announced that nobody in and out for 30 days. And I was actually, when the lockdown occurred, I was actually in Phuket, and I said, holy moly, I got to get out of here, or else I'm going to be stuck there for 30 days. And the hotels are closed. So again, as bad as it is, I think we're still going to see a positive game on that one. It's probably going to be single digit, but long term, I think you'll see big growth on that. Logistics, warehousing, I think those are kind of stable. Everything is going to e-commerce. Really not my arena, but from what I've heard, I mean, it's still on where it's going. Retail, we know it's hurting. Malls are closed. Little shops, standalone shops, they're all closed. I think the only thing in terms of that have been open is really the restaurants. So Thai people love to eat. And we're not short on food, and we're not short on supplies for food and stuff like that. That segment, as long as those restaurants are able to turn over and maybe go onto the delivery market, those vendors can still live and still move forward. Other than that, if they still stay in the same mentality of just staying localized, not going online, those guys are pretty much dead. And I think we can pretty much say that for all sectors. So as long as they start heading towards the online, I think they will be good. Obviously, we always say the big industry that's probably not waiting for the pandemic to end is probably the Uber Eats or the Grab delivery. Those guys are making a killing. Those guys are really running the streets and making other deliveries and stuff like that. So those guys are really hitting on strong. Office, I mentioned our office space is closed. But again, even though our office space is closed, we're still forced to pay our rent. We're still forced to pay our lease. We're not off the hook just because we can't go to work. I mean, even I'm arguing with like a company like Regis. They keep sending us bills, and technically their office is closed, not just the building, but their office is closed, so we can't even go to inside the office. So we're not off the hook on that, and I'm sure many other people are not off the hook on that. And even as we sneak off the meetings and stuff like that, we do see that the offices are closed, but it's still packed full of people working. Work from home is really, managed by certain companies, and certain companies still mandate that their people come to work from home. And so like I said, I went to an office today just to take a look, and I mean there's no social distancing. I mean, there's 20 people packed in a room, and we see that over and over the place. It's just not being publicized. So I think office is still maybe a short-term blitz, but overall it's still going to keep going. Maybe there's some type of restructuring in terms of, will co-working space still remain co-working space? Will we have an open floor plan? Maybe, maybe not. Maybe that we start putting some borders around that. I know that we start putting partitions around desks. So maybe some of those partitions become bigger cubicles, or maybe offices for management, or something like that. I think maybe the restructuring of the interior is probably something that gets rolled into the plans. But I think those are some of the things that, luckily in commercial space, I think we're still good to go. I think we don't have the big troubles like they have in the residential sectors in Bangkok. So I think we're just hitting a short-term blitz. Once everything opens up, you'll see a steady growth in Thailand.
Thank you, Paul. Mike, on to you.
Yeah, well, I guess let me start by saying that of course there's no winner to this whether this pandemic or this crisis right now. I guess the most the important question that we need to address here is how soon these subsectors could recover, and who among those subsectors are least affected. We could, of course, everyone's suffering from having that wait and see mode of industry players, from buyers, lessees, sellers, and lessors. Most of the players are, of course, going back to the drawing board and assessing the situation and redrafting their plans moving forward. In terms of office, we have to remember that Philippines, of course, the BPO capital of the world. So in terms of recovery, I believe this is the subsector of the commercial industry that is going to recover very soon. I believe between 3 months to 6 months. We're directly competing with India when it comes to BPO. And then, of course, as world economy suffers, the direction of these of companies is to outsource their primary functions to, say, a developing company. So the direction would be from west to east, from a developed country to a developing country like the Philippines, Thailand, India, as well. Um, then for office again, we're looking at between 6 to 8% of vacancy before the year ends. So in terms of it being manageable, it's still there. It's not that badly hit. Then when it comes to logistics and warehousing, this is the next to office is the least affected. Of course, there's still movement of consumer goods, and there's that move of retail towards e-commerce. And then, of course, there's still a need for logistics, for warehousing. So this is one subsector of the commercial industry that would still survive, say, in the next 3 months to 6 months. Badly hit, I think, well, the same story everywhere else. Of course, hospitality, where I believe we were down to 20 to 25% when it comes to hotel occupancy during the lockdown. Then same, I guess, with Thailand, when our airport opens up, well, travelers, tourists would be back. So in terms of recovery, it would take the hospitality, hotels, resorts, minimum of 6 months for it to recover. Then on retail, of course, there's a move towards e-commerce, online shopping. So this should be able to recover between 3 to 6 months as well. Uh, Aside from the 5 subsectors of commercial industry, of course, we need to mention as well that research, appraisal, and consultancy are part of commercial transactions. So this is one of the opportunities that we see would be well, opportunity that we could take advantage of. Most players will be going back to the drawing board. They'll be reassessing their plans before they go back to the market. So they'll be looking for property experts like us. This is our chance to, of course, develop the relationship and prove our work and expertise to our clients.
Thank you, Mike. Add to that property management, which
Yeah,
all of you are experts. I'll
yeah, of
get back
course.
to you, Jeff. regarding the returns and all. But I remember when I was with these large corporate real estate and our clients from the US, and we were pitching our guys from India, Thailand, and other parts of the world. We were competing internally for a major client from the US, basically BPOs, business process outsourcing, KPOs. But anyway, these are the opportunities, and maybe as a network, the leading RE community and members, we can leverage our reach. But before going back to you, Jeff, I'll just show the good news of Judith. I'll just pull up the slide here. So basically, this is as far as she can share to us. So Judith, again, she is the managing director of AGBF in Germany. I can pronounce the German word of her company, but that's the company there. So they're notarizing the deal right now. That's why she can join us. So the commercial property, so these are the information you can share, is an existing building at the heart of Berlin in Germany. And the worth of the property, 10.5 million euros. And it's a good deal, really. And congratulations again, Judith. And in terms of information she can share, same price and condition as of Germany. So basically, the deal was just put on hold because of the lockdown, but the same condition, same price. And her comments that whilst the residential sector is still quieter compared to last year, the commercial sector did not even have a week with less activity for AGBF. So it's really a good one. I mean, commercial can be a cycle proofing opportunity for the residential business. Now, back to you, Jeff, in terms of returns. And since we're running out of time, probably one round. So to you, Jeff, what would be the returns and top two opportunities, and what would be the opportunity for cross-border referrals or transactions? Jeff?
Sure. I think as we mentioned throughout that, the hospitality and the retail are the two sectors that have certainly in the U.S. had the most effect. When I look at it, in many instances, you wonder, when does somebody run out of money? Because in effect, there's nobody coming to the front door. So I think it happened so suddenly, and we're still at a stage to try to figure out where all of this leads us. I mentioned that we found that the logistics sector, remains a sector that is evolving as well. Goods from across the country can come into Chicagoland. We have inland ports still, with rail bringing product to Chicagoland, housed in warehouse distribution centers. And then the manner in which it's sold today, is changing. As I look at the number of Amazon boxes being delivered to the front door of our home on a regular basis, I don't think that's changing. And so I think, I think that remains a leading sector as we go forward.
In terms of cross-border opportunity, what would be what do you think, Jeff? What would be the sectors that would have cross-border potentials?
There still remains, as I mentioned, as I talk about logistics, there becomes real estate with quality leases that seemingly they're providing that product in a fashion where they're going to be strong going forward. And we welcome, venues like this to suggest, if there's money in Thailand or India or wherever that might be, we still, as leading RE, can continue to communicate with one another and figure out how we can put a face to a name. And I think we welcome what Leading RE's doing, because I think we've got a platform that we can continue to make money going forward. And together, I think we've all learned how to work with clients, because really we're trusted real estate advisors and problem solvers going forward.
Thank you, Jeff. John, top 2 opportunities and cross-border opportunities.
Thank you, Jojo. So I would just quickly take up the challenges as well. So when it comes to broad challenges, today we are facing liquidity and cash flow challenges, whether it comes to property owners with regards to holding on the vacancy or rent disruptions. And when it comes to occupiers or tenant, is expected business losses and future business uncertainty. And fixed cash flows like salaries and overheads. These are the challenges basically, apart from the limitation of physical site visits, face-to-face discussions, strategic decisions, and of course the fear psychology as well. And when it comes to opportunity, I think many of them are there. We have got time during the lockdown to brainstorm, innovate about a future in terms of business strategies, people management, and many other activities. And for real estate, people are more receptive to professional advice than ever, I would say, from pre-COVID, because they are now looking forward for professionals like us to advise them, to instruct them what to do and what all the process for in terms of cash optimization, which might be downsizing their size, or maybe relocating to a cheaper facility, or getting into a non-capex model, because again, cash is king as of now, and moving from maybe conventional office to a managed or a flexi office space, or maybe renegotiation strategies, or executing some lucrative lease rent with future rent commencement date, or build-to-suit transactions as well. These are the very few opportunities which we in India are in cashing on. And trust me while I say this, all these activities have been done by our company, and we are largely been successful in not only entering in terms of getting an inquiry, talking to them, getting engaged, but as well as we are almost in the verge of closing. And as I said in the early stock of mine, that we have already closed a couple of transactions in logistic warehouse, in retail, and investment as well. And for buyers, when it comes to investment, it's a great opportunity for buying assets, because today the price at which an investor can buy, because of the desperation of the buyer, of the seller, distressed sale assets can be one of a very good opportunity in terms of getting asset at a discounted price, or maybe some deferred payment plans than pre-COVID situation, or a pre-rented commercial industrial properties where it has always been a preferred asset class. So these kind of opportunities, whether it is buying or whether it is leasing, are always there. To sum up, I would say opportunities are much more than the challenges we have, and especially I would also like to touch upon India being one of the very eyed on prominent investment sector or investment country, where investment from across the sector is coming in. I would just quickly brushing up towards logistic warehouse. We all have said from US to Philippines, we all said that logistic and warehouse is thriving. That's something which has been live on. And I would like to say that here in India, it is coming up as one of the most preferred asset class. A lot of PE funds are coming in and to invest and develop warehouse and lease it out to companies, especially with e-commerce plunging towards north. That's a beautiful asset class. And then, as I said,
sorry, John, we're running out of time. Well, one or two more sentences. Thank you.
Sorry. So just to say that whether it is retail, whether it is office, or whether it is logistic warehouse, India is one of the very, very prominent iron investment place. So I think we are across the globe should be looking at a good investment opportunity here.
Thank you, John. On to you, Paul. Top two opportunities in Thailand and cross-border opportunities as well.
I think I mentioned it earlier. I think, like I said, right now we just have to change focus. If we were on the residential side, it would tell you it's a buyer's market. We're on the commercial side, it's pretty much the same thing. I think it's really a golden opportunity to start thinking about investing in Thailand. Tourism, it's always going to bounce back. We see that one of our future gains if we start investing now. We know prices will go down in about 6 months, so we start thinking about actually working with a lot of hoteliers to try to get their balance sheets, try to get their line so that when it comes, we can start hedging our clients at that route. And part of the reason I say that is because it's really a conversation that we had initially in the first place. I mean, we don't talk, in terms of our companies, we talk locally, but a lot of our strength is being big, and this is really kind of the order of what our neighbors all over the world are asking us. What are we looking? What type of properties should we invest in? And we're preparing paperwork so that they can take a look at the numbers and what they can have if they invest in Thailand. So we're we're at a lockdown, but we're not shortage on work that we can do. I think that's probably the bigger in the near future. I think we're not too slow in the office space sector as well. I think we're not too shabby in terms of the logistics and the warehousing space as well. As the pandemic hit, a lot of people go online, and that's really forcing a lot of the e-commerce to start investing. There's I think e-commerce probably started in Thailand about 10 years ago, and they're still growing and it's growing. I think because of the pandemic, it's kind of forcing them to grow a little bit faster than the norm. And then people used to be afraid to buy things online. Well, now they're not. I think, and now they're used to. And I think for certain things, they will continue to do that, and other things, obviously, they'll go to the retail. But I think those are some of the things to kind of look at if you want to start looking into Thailand. Is obviously the tourism sector is probably the number one, because it's just a little short blips, but it will continue to grow as the gates start to open.
Thank you, Paul. Mike, top priority and top opportunity and cross-border opportunities as well.
Okay, I'll make this quick. Two things. Office, of course, is one of the candidates for cross-border referrals. Again, as I said earlier, companies from developed countries would need to outsource to manage costs, and their directions would be, say, Southeast Asia, developing countries. So that will be an opportunity among leading RE members. Another opportunity, of course, is for investment funds, opportunistic investors. The Philippine Congress is passing, special purpose vehicle law, encouraging banks to unload their assets. So this will be, we've seen this same model in 2003 after the 2008 Lehman crisis. So banks would be selling on a discount between as low as 10 cents to 30 cents to $1. So this will be an opportunity for opportunities for investors and investment funds, from investment banks to private equity funds. And I have this unpopular view that during a down market, it's a different story for commercial brokers, for commercial industry. It would be a lot easier to sell properties because sellers are realistic when it comes to pricing, normal, of course, for buyers to ask for discount. So the gap would be smaller compared to big gap during an up market.
Good times or boom time, yes. Yes, thank you, Mike. So yes, I agree that in down market, usually sellers would need brokers and agents like us. So again, thank you, Mike, Paul, John, and Jeff for being here. Thank you, everyone, for staying on. Just to wrap up, so we know there are challenges because of the pandemic, but there are a lot of opportunities as well. To name a few, while the badly hit sectors like hotel, malls, there are also opportunities for bargain hunters, for investment funds. While in terms of winners, we have logistics, e-commerce, and office. So these are the opportunities. Probably for leading RE members, while majority of us will be doing residential, and more and more companies are looking to venture into commercial, just ask the extra question. We can refer it to the US, to Jeff, to Mike in the Philippines, to Paul in Thailand, and John in India, and other members in 70 countries. So ask the extra question. Again, good day, everyone. Thank you.
Thank you, Jojo.
Thank you.
Thank you,
Thank you.
Jojo.
Thank you.
Thank you, everybody. Thank you.
Bye.
Bye.
Bye-bye.